We're glad to have you back. We'll focus on the just concluded IMF Spring Meeting in Washington, D.C. But this time, we would look at recommendations for emerging economies. With Nigeria grappling with inflation, a weak currency, and a fragile economy, experts have already said that the recommendations from the IMF will provide a critical outline for addressing these challenges and promoting sustainable growth across the board. But what are some of these recommendations? Let's get talking. I'm being joined by Professor of Capital Markets, Finance, and also the President of the Association of Capital Market Academics of Nigeria. Professor Uche Owaleke joins me live from our Abuja studios. Prof, thank you so much. It's good to have you on the show.
Thanks so much, Tolu. Good afternoon. My pleasure indeed.
Prof, a lot of talks are around IMF meeting, and we see that sometimes these issues are almost the same. High inflation, currency issues, interest rate issues, climate change issues, and of course, energy transition. These are the issues that are being raised at most gatherings like this. But for a country like Nigeria, grappling with high debt and all of this, what should really be our specific takeout from this meeting?
Well, it was good Nigeria participated actively, at the just concluded spring meeting. Of course, the IMF World Bank spring meeting brings together central bank governors, finance ministers, academia, private sector, including civil society, groups, to assemble in Washington, D.C. and, of course, deliberate on economic challenges, facing the world. That of this year, wasn't an exception. And of course, it's also an opportunity for the IMF and the World Bank to release, their major reports. We saw two major reports released by these Bretton Woods institutions, namely the Global World Economic Outlook and the Global Financial Report. The Global Economic Outlook, we saw the IMF projecting a global economic growth rate of 3.2% for 2024. And in the case of Nigeria, of course, growth rate was also projected to be around 3%. But there is also something worthy of note there, and that's the fact that the IMF and the World Bank, think that the Nigeria's economy would, slip to the fourth position in terms of size, in terms of, US GDP size, by the end of this year, behind countries like South Africa and Egypt. As a matter of fact, the projection is that Egypt would overtake Nigeria and become the first. They put Nigeria's GDP growth for 2024 at just $2.5 billion, which is, of course, significantly lower than what it used to be, largely on account of the, depreciation of the naira. And then when you come to think of it, that figure may not really represent the, true size of our economy. If you consider again that, a single company in Saudi Arabia, for example, Saudi Aramco, is valued at over $2 trillion. So I think those projections by the IMF for Nigeria may not truly reflect, what we are, our size, and which is also why I think that with respect to numbers like that, the National Bureau of Statistics, should be, on top of the game. The government should rely more on figures from the National Bureau of Statistics than on the ones released by the, by the IMF, and the World Bank. So overall, of course, it has come and gone. The next major event or summit is the one we understand our president will be participating in, and that's the one coming up on April 28th, the World Special Meeting of the World Economic Forum. But one thing I need to also say here is that usually at these meetings, it's also important to, if you like, review the performance of outcomes of previous year's meetings. But somehow you don't get to hear that. You don't get to hear in the calendar of events for 2024, for example, spring meetings. You don't get to hear of a session that majorly reviews the outcome of the 2023 spring meeting, which also held in about this time last year in April, where they talked about empowering women entrepreneurs. They talked about strengthening food, security, the private sector, and all that. So you now come into 2024, and you move into new sets of issues. For example, in 2024, the World Bank is talking about helping 300 million, Africans to access electricity in partnership with the African Development Bank, and also 1.5 billion people in terms of access to healthcare. So some of these targets should be reviewed. Progress should be reviewed, in some of these meetings. That's something that I think is missing. I don't get to hear that. Usually they move into new themes, new issues on an annual basis.
Prof, that's interesting. Issues around currency, of course, with what has happened in recent times, would be touched at this meeting. And I want to stay with Nigeria now. We've seen the Naira gaining strength against the greenback. That's what we've seen in recent times. Is that the last check, the 1,100 to $1. And in few months ago, a few weeks ago, it was almost 2,000 Naira. Now, my question to you really will be, practically, what do you think is helping give Naira this strength that we're seeing in recent times? And how sustainable is this? Because that is what will impact, of course, on the price of goods and services.
Yes. Tolu, you recall this issue was also addressed at the spring meetings. Yes. Central Bank Governor, seized the opportunity to also, explain, a number of issues around the forex, and also debunk, some rumors that the central bank has started, once again, defending the Naira. I think they produced data to show the CBN governor made it clear that what the central bank has been doing in recent time hasn't actually been to defend the Naira, but to, create some sort of, send some sort of signal to the market. And that has gone a long way to restore, confidence. For example, I'm sure you read, even before the spring meetings, that our external reserves fell significantly. That was attributed to the fact that the central bank was defending the Naira. So at the spring meeting, the CBN governor seized the opportunity to say that the depletion in the external reserves we saw in recent time, especially in the month of March when it dropped by over $2 billion, was more from meeting the obligations of the central bank and even of Nigeria, to external creditors, including the clearance of the forex backlogs. So central bank has used much of the dollars, much of the reserves, to clear backlogs, to meet debt obligations, and not necessarily to defend the dollar. Yes, central bank began the sale of forex to BDCs, $10,000 in a week, and from records, FMDQ, what they have done so far, has just been around $60 billion. And then if you take the whole thing, 60 million. If you take the whole thing, it's just about $640 million, representing just less than 3.5% of the total liquidity that came into the forex market, within that period. So the point the CBN governor made, and he made it very clearly, was that the central bank was not actually defending the Naira. The central bank had used the reserves to meet, foreign obligations, which in the first place is part of why the reserves, are kept. Okay, all right. So that has gone a long way to also firm up, increase confidence in the forex market and firm up the Naira. So the clearance of forex backlogs, was a major move by the central bank to bring confidence and to calm the market. The sale of forex, to BDCs was also a move to bring about some sort of liquidity, in that space. And of course, we also know the move to the clamp down Binance helped a lot to also, take out some speculative activity in the market. And some other measures to the bank has taken, including the removal of exchange rate limits with respect to international money transfer operators. And I understand too, on the side of these spring meetings, he also had a meeting with international money transfer operators on ways to incentivize more inflows, into the country. All right. So these are some of the measures the central bank, has taken, which has resulted in what we see today. The naira transiting, if you like, from one of the worst performing currencies in the world to about the best performing currency, in the world. Okay. Now, the question you asked about sustainability is very, very key. And of course, part of why that also happened, part of why the central bank got the kind of inflows they had to, do what they have done is because they have raised rates, which has also attracted some, inflows. But again, when you talk about sustainability, yes, that's a very good question. These foreign portfolio investors will also leave. They will be leaving in 3 months' time, in 6 months' time, okay, because they have just taken positions on a short-term basis. So when they leave, there will also be pressure on the, the naira, and that brings me again to the question of sustainability. These things have to be sustained. Now, part of what I think the government, is also doing to ensure that in the next 3 months, in the next 6 months, we don't get into this kind of, pressure, has to do with the loans they are negotiating. The CBN, the Minister for Finance, in that spring meeting, talked about Nigeria qualifying for a $2.25 billion, dollar loan. And people have said, oh, why take this loan, given our huge debt profile? But my take on it is that if it's a loan from the World Bank, a very concessional loan, 40-year loan with another 10-year moratorium, just single nominal interest of 1%, I think that's not bad. It's something that we should welcome. It will also help us to, ensure forex, stability. So I think that will go a long way to help the CBN sustain what it's doing, so far.
Prof, a lot in that response. Now, let's wrap up now almost finally with the financial institutions and, of course, the move by the central bank to recapitalize them. I think the focus is to get to a $1 trillion economy, which many say is achievable. What do you make of that? Are there any worries? What's the outlook for the financial space moving on?
I think the outlook is bright, very bright indeed. You also recalled only recently the government is also talking about the idea of issuing, dollar-denominated bonds in the domestic markets on the exchange, Nigeria. So raising and it's been speculated that targeting as much as $30 billion. From that market, which is about the size of dollar assets we have in Nigeria. A lot of people have, money in their domiciliary accounts. The government wants to raise these bonds, incentivize them to kind of invest them, if you like, for a while. So I think that will be healthy for the, financial system. The capitalization, as you know, will help to put our banks in a stronger position, particularly the ones with international license, to compete in the global scene. If you look at capital importation reports that the National Bureau of Statistics releases, you'll find that just 3 banks, Citibank, Standard Chartered, and Stanbic IBTC, account for the bulk of capital that's imported into this country, and that's because they are foreign banks. And of the 3, it's just Stanbic IBTC that is, quoted on the exchange. So by the time you now have the banks like Zenith, GT, First Bank, the other banks also become bigger in terms of share capital plus share premium. I'm not talking about retained earnings now. Of course, they've been in a position to attract, more capital into the country because, their profile will rise. So, in all, it's something that will help. That is positive for the financial sector. Yes, there are concerns about shareholder concerns, for example. That's why you also find today stock prices are going down, particularly the banking stocks are going down. They are going down because of the immediate concerns. Earnings per share will reduce, dividend per share will reduce, and all that. But in the medium to long term, that is something I think that is in the very best interest of the financial sector and of our economy in general.
Well, it's a good way to leave it. Prof, I must thank you so much for your time, always educating and having you on the show. Professor Uche Owaleke, Professor of Finance, Capital Market, President of the Association of Capital Market Academics of Nigeria, live from our Abuja studios. Thank you. Do enjoy the rest of your day, Prof.
Thank you, Tolu. My pleasure.